Okay, let's dive in. You've handed us quite a stack here. Articles, analysis, market commentary, all centered on XRP.
That's right. It's been requested, and there's certainly a lot to talk about.
Definitely. So our job today is to unpack what these sources are telling us about XRP's, well, roller coaster ride lately.
Mm-hmm.
Figure out what drove that big price surge we saw.
Yeah, late last year, early this year.
Exactly. And then why it pulled back so much. It's down quite a bit.
It is. The sources put that pullback around 34% by late May.
Right. So where does that leave XRP now, according to this material? And critically, does this dip look like an opportunity?
That's the big question these sources grapple with.
And just for context, we're working with info available up to, late May 2025?
Correct. So it's a pretty current snapshot of the situation as described in these analyses.
Great. Now, what's immediately striking looking through this is how much external factors seem to play a role with XRP. It's not just crypto market stuff, is it?
Not at all. The sources really emphasize the influence of political expectations, regulatory buzz, and just the broader economic climate. It's a fascinating mix.
It really is. So let's start with that first big event, the massive run-up. What do the sources say happened to XRP, say, November 24 to January 25?
Well, the numbers themselves are pretty staggering. The sources consistently highlight a gain of 255% in that time frame.
255%. Wow.
Yeah, and they make a point of saying it wasn't just riding a wave, it significantly outperformed other big names like Bitcoin, Ethereum, even Dogecoin during that specific period.
Okay, so not just a minor bump. Did it hit a notable peak then?
It certainly did. The sources state that rally pushed XRP up to a multi-year record price. We're talking $3.31 per coin back in January 2025.
$3.31. Okay. So what was fueling that? What were the key drivers behind that huge surge, according to these materials?
The sources point to kind of a perfect storm of narratives building. One major factor they link it to is the general post-election crypto rally. Specifically, they connect it to the Trump campaign's very vocal support for crypto during the 2024 election. Promises about regulatory changes, promoting mining.
Right, I remember that talk.
And according to these sources, that created a really positive sentiment across the crypto market, but maybe especially for assets like XRP that were seen as potentially benefiting from regulatory shifts.
Okay, so political wins, or at least the hope for favorable wins, was one factor the sources identified. What else?
Well, building on that excitement, the sources talk about a lot of chatter, a lot of speculation about the government possibly setting up a strategic cryptocurrency reserve.
Like a strategic oil reserve, but for crypto.
Exactly that idea.
Mm-hmm.
And in that context, XRP was floated pretty widely in speculative circles as a likely candidate to be included, which
Got it.
led to anticipation of maybe a Trump bump. The idea that if the government started buying XRP in bulk for this reserve, demand would just explode.
Yeah, Uncle Sam becoming a whale buyer, that would definitely move the needle. Makes sense that people got excited about that possibility.
Yeah.
What was the third main driver mentioned?
This is the one the sources often describe as, quote, arguably the biggest potential price booster.
Okay.
It was the growing belief, the strong anticipation that the long-running SEC lawsuit against Ripple was finally nearing an end.
Big one.
Yeah. With the talk of a more crypto-friendly administration, potential federal crypto investments, the market narrative, as reflected in these sources, became that the SEC lawsuit would have to go away.
Which would be massive for Ripple, wouldn't it? Clearing the way for U.S. business without that legal shadow.
Precisely. That's seen as crucial for unlocking the domestic market. So you put those three things together, the general pro-crypto political vibe, the specific hope of government buying XRP, and the strong expectation the SEC case was ending the sources, suggests this created a really powerful narrative.
A narrative that fueled that massive 255% run up to $3.31?
That's the picture the sources paint.
Okay, so that explains the climb. But then spring 2025 rolls around and things change. The sources talk about a significant drop. We mentioned 34% down by late May. What happened? Why the reversal?
Yeah, the momentum definitely reversed course. After that January peak, the price started heading south. By May 30, 2025, the sources have it at $2.18 per coin, which is that 34% retreat you mentioned.
So what went wrong? What reasons do the sources give for this decline?
They lay out a few key things. Firstly, that big government buying spree everyone was hoping for.
Let me guess, didn't happen.
That's exactly what the sources state. It did not materialize as speculated. Yes, a strategic Bitcoin reserve was announced and something called a digital asset stockpile.
Right.
But these are primarily about managing crypto the government already had, often from seizures and things like that. It was, and I'm quoting one source here, not what the XRP camp had expected.
So the big demand shock never arrived.
Nope. The source says the dream of a federal splurge on XRP coins was dead. So the market had priced in something big that just didn't happen. That took a lot of the air out.
Okay, unmet expectations. That makes sense. What else contributed to the drop?
The broader economy wasn't helping either. The sources consistently highlight that economic uncertainty weighed on all sorts of investment markets this spring.
Mm-hmm. Things felt a bit shaky.
Yeah, talk about tariffs, potential trade issues, inflation worries. It created what they call a risk-off environment. Investors get cautious, they pull back from things seen as riskier.
And crypto often falls into that category for many investors.
Exactly, especially altcoins. So that general caution hurt.
And given what Ripple does cross-border payments, did the economic uncertainty hit its specific use case too?
The sources suggest it did. They note XRP's focus on international money transfers was, quote, particularly unhelpful in that climate.
Why is that?
Because if global trade slows down due to uncertainty, then border-crossing payment volumes could drop dramatically. That potentially weakens the fundamental demand story for XRP, at least in the short term.
Okay, so you've got the government buying hopes dashed, general market risk-off sentiment, and potential headwinds for Ripple's actual business. Anything else driving the price down?
Yes, the technical started looking ugly too, according to the sources.
Ah, the charts. What were they showing?
They noted the emergence of bearish technical indicators. Things like XRP breaking below key support levels. These are price points where buyers usually step in, so breaking below them is generally seen as a bad sign. Suggests weakening demand.
Okay. Were there specific patterns mentioned?
Yes, they cited things like bearish technical patterns like a descending triangle signaling potential further declines.
A descending triangle. That's not good, right? Shows sellers are getting more aggressive?
Typically, yes. It shows lower highs pushing down against a flat support level. They also mentioned other indicators, MACD, SMAs, basically confirming weak buying pressure. And the price was stuck in a descending channel, lower highs and lower lows, all suggesting the downward trend was pretty established by then.
So the charts basically confirmed the negative sentiment and the selling pressure. Okay. That brings us to now, or at least late May 2025 in these sources. XRP is sitting around $2.18. And the big question they pose, is this 34% drop a dip worth buying? What do they say about the risks versus the opportunities at this level?
They present a pretty balanced view, really. They lay out clear risks, the bearish arguments, but also potential opportunities or bullish factors.
Let's hear the risks first. What are the main concerns highlighted?
Well, first, they reiterate those bearish technical signals we just talked about. The chart still looked weak. They flag key support levels to watch below $2.18, around $2, then at $1.77. One source even mentions $1.40 as a possibility, calling it a historical liquidity zone.
Meaning the price could fall further based on the chart pattern.
That's the technical risk, yes. The bottom might not be in yet.
Okay. What about institutional interest, the big players?
That's another warning sign sources point out. They state pretty bluntly that institutional demand for XRP investment products has recently waned, with significant outflows noted.
So big money was pulling out of XRP funds.
That's what outflows means, yeah. Money leaving dedicated XRP investment products. The sources see that as a negative short-term indicator. Less demand from those big buyers.
Makes sense. And the legal case? Is that still a risk?
Well, even though everyone expects it to end soon, the sources caution that until it's actually finalized a settlement, a ruling, ongoing legal uncertainties technically remain a risk factor.
Right. It's not over till it's over.
Exactly. And finally, just that general risk-off market environment we mentioned, that continues to be a drag on altcoins like XRP.
Okay, so technical weakness, institutions pulling back, lingering legal uncertainty, and macro pressure. That's a decent list of risks. What about the flip side? What opportunities or bullish points do the sources bring up?
There are definitely positives highlighted for the longer term. The expected end of the SEC lawsuit is still viewed as a major plus, leading towards that crucial regulatory clarity.
Which Ripple desperately needs for its U.S. business.
Absolutely, that's number one. Then they point to fundamentals specifically, the growth in actual usage, Ripple net adoption.
What are the numbers there?
Sources state it's now processing nearly 1 million payment transactions per day, which sounds like a lot.
That does sound significant. How does that compare?
They provide context. Apparently, it was only about 150,000 daily transactions 2 years ago. So that's a huge jump. Real tangible growth in the network's use.
Okay, that's a strong fundamental point, almost a 7x increase in daily transactions in 2 years.
Yeah, it indicates the underlying tech is being adopted more. Another huge potential catalyst they focus on is the possibility of XRP-based ETFs getting approved in the U.S.
Ah, the ETF factor. We saw what that did for Bitcoin.
Exactly. Sources see the fact that several financial firms have filed paperwork to launch these as a really big deal. One source mentions 9 spot XRP ETF applications are currently under review.
9. Wow.
Yeah. And the thinking, according to the sources, is that ETF approval could boost XRP significantly. It just opens the door to way more traditional investors who might not buy crypto directly but would buy an ETF. Some analysts cited or even targeting $5 or higher if ETFs get the green light.
$5. That's more than double the current $2.18.
It shows the kind of impact analysts think approval could have. They also briefly mentioned Ripple launching its own stablecoin, RLUSD, as a positive step for simplifying payments within their ecosystem.
Okay, so a mix then. Short-term technical and macro risks, waning institutional flows, but weighed against potential regulatory clarity soon, strong underlying transaction growth, and the massive catalyst of potential ETFs. It's complex.
Very much so.
So for you, the listener, maybe looking at this $2.18 price and that 34% drop and wondering, should I buy? Oh, what kind of practical strategy do the sources suggest?
Well, they do address that directly for someone thinking about building a position. Given the volatility and the mix of signals, they tend to recommend a dollar-cost averaging approach. Right. They specifically mention an idea, like buying in thirds, as an example.
Can you just quickly explain how that works?
Sure. Instead of trying to guess the exact bottom and throwing all your money in at once, which is really hard.
Impossible, maybe.
Pretty much.
Yep.
With DCA, you decide how much you want to invest overall, but then you break it up. Maybe buy 1/3 of your total planned amount now, another third in, say, a month, and the final third the month after that. Or on specific price drops, you invest systematically over time.
And the benefit?
The sources suggest it lets you start a small position today and add to it over time. You get some exposure now, but if the price does dip further, like those technicals warn it might, your later buys will be at lower prices, averaging down your cost.
So it smooths out the entry price and reduces the risk of buying everything right before another drop.
That's the idea. But the sources are very clear. Whether this dip is a buy for you depends heavily on your personal risk tolerance and investment outlook. And crucially, your investment horizon.
Meaning how long you plan to hold.
Exactly. If you're thinking long-term, years maybe, and you believe in the potential from regulatory clarity, adoption, ETFs, then maybe $2.18 looks attractive despite the short-term risks. If you're more short-term focused or can't stomach volatility, maybe not.
Makes sense. Any final words of advice from the sources on this buy the dip question?
Yeah, the overall tone is one of cautious consideration. They advise caution and careful monitoring of support levels and news developments before buying the dip. Basically, keep an eye on those technical levels, $2 and $1.77s, and watch for news on the SEC case or those ETF applications. Those will likely be major drivers, one way or the other.
Okay, so we've traced the story through these sources from that incredible rally fueled by high hopes about politics and lawsuits,
Up to $3.31,
to the sharp pullback when those hopes didn't quite pan out and the economy got shaky,
down 34% to $2.18.
to the current situation, late May 2025, where you've got these clear risks, technicals, institutional flows, but also these potentially significant long-term opportunities, regulatory clarity, real adoption growth, the ETF wildcard.
It's a really tangled picture right now, according to this material.
It really is. Which brings me to a final thought. Reflecting on everything these sources have laid out, so much of XRP's big moves, both up and down recently, were tied directly to anticipation of external events, government actions, political shifts, lawsuit outcomes, much more so than, say, just its transaction volume, even though that has been growing strongly underneath.
Yeah, the narratives seem to overpower the fundamentals at times.
So what does that heavy reliance on external speculation and political tea leaf reading, as described in these sources, tell you about the unique nature of value and volatility in crypto compared to, say, traditional stocks or bonds? How much is tech and how much is story?
That's a deep question, isn't it? Really gets to the heart of what drives this market.
Definitely something interesting to mull over. Thank you for bringing these sources to the table and helping us unpack them today.
Glad to do it. Fascinating stuff.
Thanks for joining us on this deep dive.